Hi, this is Anisha also joining in. You mentioned in the opening chat that perhaps there's a short-term trading bottom which has been formed, at least for the US markets. But would you say it's a similar view for India as well? Because we haven't fallen that much in context of what's happening across the globe. So how are you looking at the Indian markets at the moment?
Yeah, I mean, the Indian market's been quite resilient. I mean, if you look at it in local currency terms, we're just off the all-time highs. And if you look at it in dollar terms, using the MSCI India US dollar term indices versus the S&P, you know, India's outperformed year to date the S&P by roughly 15%. So we've actually got a totally different chart structure, a more resilient chart structure. And basically the Nifty's been in a trading range between 15,200 and 18,200 year to date. And, you know, with a relief rally in the US market, we can see the Nifty retesting that 18,200 area and potentially breaking out of this range. Now, a successful breakout from this range will give us two targets, an initial target around the 20,000 area, but the longer term target of 21,400. So it has been resilient. It has been an outperformer year to date, but in the near term, it looks like we at least get a test of the 18,200 area.
So 18,200 over what time period, Laurence?
Sorry, just repeat the question.
So you said 18,200 can be tested. I'm asking what's the time period that you mentioned?
All right. I mean, so the 18,200, we think we can do that into November. So, you know, very short term, we can trade up to that 18,200 area.
You just gave us our next headline, Laurence, and I'm now tempted to ask what's going to lead the Nifty 50 onto that mark. Seems like it's going to be banks. They are really doing the magic trick.
Yeah, I mean, it's been a sector that we've highlighted continuously as the long-term leadership for India. And it's really sort of come to the fore over the past 6 months, and we don't really see that changing. So yeah, Indian banks would be the standouts. We started to see some improving price action in the pharmaceutical space, which has been an underperformer. So we've seen a bit of rotation, and what we would be highlighting is the Indian autos, which have had a great run up in the first half of this year. We're starting to see some slowing upside momentum. So actually we'll be taking some profits in the Indian auto names and switching into the farmers, which have been an underperformer. But the key sector to be overweight remains the Indian banks.
At the same time, Laurence, what I also want to understand is what is the biggest risk, according to you, that you foresee right now? Is all the negative in the price? Because, you know, the street still seems pretty divided on whether the US is headed in for a recession or not, what the Fed is going to do next on rates, and then the repercussion, of course, on equity markets thereby.
Yep. So from a chart basics, the key macro market we're looking at is credit spreads. What we've seen historically is when we see those credit spreads accelerate, the markets globally become vulnerable to a liquidity events, which typically creates a Delta 1 environment. And what I mean by that is that everything falls together. There's no real opportunities for rotation or outperformance like you've seen from India this year. So the key credit spread that we track is the bar cap US corporate high yield minus US 10-year yield. And the level that we're monitoring closely is the 600 to 613 basis points area. As long as those credit spreads remain below that level, we think we can continue to see this rotational price action that we've seen in markets, and that will give the Nifty at least that opportunity to trade up to that 18,200 area. But if credit spreads had to blow through 1,600 basis points, you know, there's a risk that we do see a liquidity event that gets markets selling off in unison and no option to do any rotation.